The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, and it is my pleasure to be here Monday, Wednesday, Friday, 11 o'clock until noon Eastern Time at 877-927-6648. And thank you, Tom O'Brien, for a great lead into this show. And, of course, being Friday, you're going to get Nico DeHaan at noon, and all about health, living a primal lifestyle. Just a great show, and quite a contrast to what we do here. But, in fact, since he does pretty much technical analysis, it's very enlightening. I certainly, when I have a chance to listen, I always glean something, and I think it's obviously very important, especially if you do trading, especially if you do things that can create some kind of pressure. All of this helps. Then you have Dave White, 3 o'clock till 4 o'clock, and then Tom O'Brien wraps it up for the week, 4 o'clock till 6. So we've got great programming here at TFNN 877-927-6648. Love to take your calls. Now, let's just do a little recap here. I've been discussing that in the Dow there was this incredible single leg up from 12,734 on March the 6th. Went all the way to 13,289 on the 16th. And then there should be a bit of a pullback, no more than six bars maximum, and a new high should be made. In fact, we had all week in which to make a new recovery high. Failed to do so, and so far, with less than 2 hours into Friday, it doesn't look like we're going to be able to do that today. What does that say? It says a couple of things. Number one, it is extremely rare for this number of, that's the Dow, that's for the SPY to go to a peak C and then fail. It hasn't failed yet. It'll fail if it closes underneath that gap up bar, the low of 138. If it closes under 138, that's a failure. It's really unusual. But I spent a lot of time yesterday afternoon and evening on a chart pattern. I hope I can show it here because I didn't realize that it was, I'd copied the database on a chart that has a bug in it. Now you can see it right here. I'm not going to touch it because if I touch it, it suddenly starts to shrink. There it goes. If you're looking at Tiger TV, I love this. I hate this because it's just the worst thing that can happen to you while you're trading. But I love looking at it. Look at the way everything's just shrinking till it gets to the zero bar. So all the typing, all the notation I had, that picture last night was what I saw. My wife and I were looking at I love looking at the animal shows on TV. And on public television, they had the show on, I tuned in late. But it showed these birds. It showed these swallows. Were they swallows? Anyway, 50, 100,000. It was almost impossible to say. And as they were flying, they were making these incredible form. It almost looked as if it was the modern day age looking at the computer with designs that formulate, and they make the spectrum, and they take the shapes and they morph into triangles and rectangles and circles. Well, these swallows are doing exactly the same thing. I'll just do this again. Now, the reason why, I'm going to have to try to keep it. I can't. Okay, have a quick look at it, and all you can see is that it made a peak D. The Dow made a peak D in an alternate wave count. I'll try. I can't keep it going here. All right, there it is. Now, what would happen is with the 12,743, I'll explain it. And the reason why I want to go into it is because I spent a lot of time on this, and I went through it. I discussed it as a possibility, and then yesterday I sent the charts out to my subscribers to show that there is an alternate count that I cannot rule out, especially if certain parameters are taken out, which is the reason why at 12:30, when my show is half hour after my show is done, I'm going to be giving an update, a very rare update to my subscribers, and the reason being, I just want to go through a couple of things to clarify. I'm not even sure we'll make any changes. We've got our core positions on the long side. We've also got new short positions, I should say. I don't really have to do very much other than to say this particular chart pattern is very important for a couple of reasons. And the first one, and I consider that this is actually a very, very important reason, is that if this ChapmanWave flat base restart actually works out, what would happen, especially after 3 black candles, as we had up until yesterday, if we do not get a doji candle today or a bounce coming out of the descending triangle, going towards the 13,070s right now, Dow's at 13,044, preferably touching, tagging at least the 13,101 9-period exponential moving average, I have to consider that if we were to break under 13,000, close underneath there in the 12,900s, there's a chance that we've made a pattern that I call a flat base, ChapmanWave flat base restart. And I'll explain what it is very briefly, but today's Technical Friday, where we can go a little bit deeper into the ChapmanWave and why it is really important in terms of the waveform and the structure in most of the charts. Even the Qs have made a peak C, a very clear peak C. I could rename it. Some of them I cannot rename at all. I just don't know what to do. It would be a failure. So this is a very important day in that context. It's a very important day in the context of many of the chart patterns that are unfolding. So I'll go through this. Let me go through this very quickly. I'm going to sort of try to pull this chart up, and I'm not going to touch it. If it's there, it's there. If it's not, it's not. But if I start messing with it, oh, man. Okay, there it is. From the low bar of the 30th of January, if you started a buy mode, even though the 12,743 base was then taken out at 12,734 on the 6th of March, this particular ChapmanWave flat base restart over the past 6 months to a year, and I like to spend at least 6 months on a chart discussing it before I use it as a particular technique in the ChapmanWave. That says if we've made that flat base restart, the A that I've got here at 13,289 in the ChapmanWave is going to become an A minus. In time, it should almost be an A minus, but it hasn't broken down. It's gone, yep, the cup and ladle pattern in the ChapmanWave that I've notated here, that usually goes to a high, and then you get the lip, the turnaround, and that lip tests the previous peak, which was 13,055. That was the breakout on the 13th of March. So you got the cup formation and an immediate snap right through. So we've already done that. So it's really important by day's end, instead of declining and closing down about 40 or more points, that the Dow, I'm using the Dow now because it's so important, the Dow needs to climb and close towards the upper end to get into the body of yesterday's candle, which was not a huge candle in terms of price movement that we've seen historically in the Dow in this quarter from January. But certainly in terms of the last 3 down candles, very ugly candles. So it's really important that you stop the trend. I don't want to see a doji here and then a close underneath today's low, because that could give us a one-to-one relationship in terms of the dojis and the meaning of a doji. If you in a trend and you make a doji as a halfway pit stop, just a refueling station for the trend to continue. So I needed to go through that. Another thing I wanted to talk about was there's an arch formation in the 120-minute chart. It made a body at the top at a peaky doji high, but then it failed. It broke down on the 20th of March. It went to 13,123. That was a tip-off that it might fail. Now what we've got is an arch formation which says that 12,885 is going to be really critical as support over the coming 2-3 sessions. Now what's interesting is that we've got the inverse here. We've got a trough E if there's a higher low bar in the next 120-minute chart of the Dow, but it's already a peak D, and peak D's in the volatility index 120-minute chart historically meaning just going back enough periods to be able to say historically, has given a pullback indication, and that's exactly what happened from the high in the VIX of 1658 at 1530 on the 22nd, yesterday. We've pulled back. Here's another thing. The volatility, the TRIN index, the ChapmanWave TRIN index gave a bounce signal, which says that there's a really good chance that sometime today, after some selling has been concluded, there should be a bounce to the upside to get out of that V-shaped pattern that I was talking about in the daily chart. Let's just move that correctly. There it is. And that says that the real V-shaped pattern will start to break out if the Dow can get to 13,076. That's just another 25 points or so from here. If it does that, that's important. Now, let's go to something else. Let's go to the dollar, DXY. The dollar is failing. And that says to me, in a way, it is a positive for the market. But wait a minute. What's happening to gold? Well, the GCM contract is having a very nice move right now. So let me give you the numbers. The Dow is up 10 at 13,056. The S&P is only up 0.41. It's lagging at 1393. The comp index is down 7 and 3/4 at 3055. Gold is up 22 at 1664. Silver is up 73 at 1308. Platinum is bouncing at 1634. High-grade copper is up at 3.81 again at up 4.45. Crude oil is at 107.03, and we've got bonds up 23.30 seconds. Now, that is telling me the context that we are in. That says we're in, as I said to subscribers today, we're in a little bit of caution here because we've got, I didn't say the word because I'm tired of the word, a bifurcated market. And that's basically saying that the spectacular stocks that have been going up so strongly, many of those sectors are on fire still and are acting very well. Some of them are just beginning to show signs of topping. And in that sector, I'm including the chance that we might be seeing some kind of topping action, possibly in the auto parts area. I'm watching the CMG area. That is the restaurant. CMG broke out huge yesterday. Now, here again, I don't know what to call this. I'm calling it a peak D/B. But it broke out of the weekly channel. Oh, no, it hasn't. It's right in that weekly channel, about to hit the inside track resistance. It's leg F/B. And Chipotle Mexican Grill, CMG, down 3.38 at 414, has, in fact, a monthly chart. I'm calling it leg F for now. There is no other way that I'm going to count it at this particular point, because this is a parabolic stock. So when I put that together and I'm running the TLT, I'm saying the TLT is running to the upside. You know what? I'll take a moment. I just want to think this through clearly. You and I together, we're going to do this, and then we'll go to stocks, and we're going to go to different sectors, and I'm going to take as many calls as I can today. As soon as I do that wrap up, I'll make it a real quick wrap up when we get back. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Just let me finish that thought from the Dow. The ChapmanWave flat base restart implies that from the breakout area, and it's very much like an instant restart. This one is not like an instant restart, but usually it is. And it tells you that if you were to break a certain point after a peak, D or E, and you start to pull back, there's a chance you could go all the way back down to the breakout area. So that's what I'd be watching very closely. So it's really important that not only is there a rally today, but these incomplete peaks that I've been looking at will be completed sometime next week to the upside. Very critical period. So we're going to go to, let's see. We had a caller. I'm not sure if he's going to be calling back. He did want to look at the XLF, so I'm going to look at the XLF, and if you want to call back, that'll be great. Just give a yell as soon as you're there so that I know you're on. The XLF is trading. This is the S&P Select Financial Spider Fund. Gave a peak F-top in the ChapmanWave on the what was that? That's a 120-minute chart. So it pulled back from the high of 1597 down to the low yesterday of 1553, and right now it's trading at 1565. Now the real thing is this: if I am looking at, and here is one of those chart patterns, I've tried this every which way. I don't see any other way that I can call it other than it's made a peak B. It's holding the 9-period exponential moving average, and it should continue higher. So if the questioner wanted to know, it was Mike, if Mike wanted to know where I think it's going, I like this action very much. Yesterday's low was 53. Today's is 15.54. It's a penny higher. That I like. It's an inside bar. I suspect, based on my 120-minute chart, that if the XLF is able to get to 15.74, either this afternoon or Monday morning without taking out 15.50, then it's going to work its way all the way into that ugly candle of the 21st, the 120-minute chart with a high of 15.95. If it even gets into that area, I would have to say that there's a very good chance that leg C is going to begin, and that leg C will take us to 15.98 and higher. That's where leg C starts. So those are the two parameters. Of course, the question is, would you start a position here when in the Chapman wave you're really at an inflection point, a very important point where you could go back down, or you could go, oh, Mike is back. Hi, Mike, how are you?
Hi, Basil. We spoke several times about Bank America, and a lot of people that I know are in it now. Obviously, you know how that drill goes. Everybody wants to get in, but they all get in at the highs for some reason because we have that tendency to join in the crowd, that group mentality. But, Donald Trump's not in the group, and neither the others. I mean, it's branching out and going ahead from the group. That's what
let me talk about this, because right at this very moment it's making a very interesting chart formation, and that chart formation says that if, having held the 9-period moving average, Bank of America, which is at $9.69, manages to climb above the candle high of yesterday, that's $9.77, not much more, it's 8 cents, then there's a really good chance that it confirms what I'm thinking, that some of these chart patterns will complete in the Chapman wave to the upside. That would say that leg D in Bank of America above $10.10, that would be at $10.11, will begin. And I would have to tell you that at that point, which would be early next week, that's when I'd say, okay, now you've got to be a bit careful. But if the XLF is a little behind, it's only in peak B in the daily, that's got quite a bit of a way to go to be able to get to peak C and D. So my parameters are pretty much set, and I have to tell you that if this was really a bear market that we've begun, then although we've had three ugly candles in the Dow, not quite as bad in the S&P, those price points should have been much higher. There should have been strong triple-digit down moves, number one. Number two is, when you go into the bear phase, overnight the futures are down sharply, then the market tries to rally in the morning, and very quickly it goes smash down to lower lows. We've had some of the opposite effect here. So my bias has to be that I'm more inclined, even though we have some short positions on, I'm more inclined to be going with specific stocks that are looking good still, and sectors. And I have to tell you, the more I look at the bank sector, just in this particular phase right now, there's a chance that they can go a little bit higher into next week. That's when I would become very cautious. So I'm in your camp to say now's the time to be a little bit more cautious, but I don't know if we are there yet. You want to hold on?
Yes.
Okay, hold on. We've got Mike, and we're holding through the break. The Dow's up 25, S&P's up 2. Nice little turnaround for that declining wedge breakout formation. We'll be back.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in the complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 877-927-6648. That's not the number of the Dow. That is, the Dow is up 36, S&P's up 3.5. And we're on right now with a Mike from Palm Harbor. We're talking about Bank of America and the XLF. So I don't know if you have any position right now in Bank of America, unless you're keeping core positions, that's different. But on a very short-term basis, Mike, so what are you doing? What are you looking at?
I got in back in at 955 today, and I'm looking at, it's unbelievable, because we have that tendency to say, well, look how far something's traveled in such a short time. So we have a tendency to be fearful of that, but that fear, if I'd had that before, would have cost me a lot of money.
Oh, absolutely, yes.
But it's the Bank of America also today, as far as news goes, besides the charts, they're opening up and having dialogue with some homeowners, as you probably read, about renting, which seems like some huge revelation, but to us laymen, it was only logical, like you could have done that 4 years ago,
Right. Actually, they could have done it, but politically it wouldn't have gone down well. Now it's sort of under the radar, and they're just doing it. And it's only, I think, 1,000 people, but it's a trial balloon, and I suspect that's the way they're going to go. But let me just tell you something about the Bank of America chart. There's a gap in Bank of America on the 120 chart, which, of course, is also in the daily, but I'm showing the 120-minute chart here in the Tiger's Den. And what was important is that there are a number of gaps, but the last one with a low of 933, the low today is 940. It couldn't even get down to the gap. So my suspicion is, based on the stochastic turning up and the MACD turning up, is that if by the end of the day Bank of America closes anywhere around 970, preferably above 975, days young, anything can happen, that would say to me, yes, there's enough strength, and I have to go with the MACD, which is still very strong, stochastics at 84%, with the greater percentage weighing in the scale that it will, at some point next week, try to make that leg D to the upside, which would be above $10.10. But then I also have to wait to see what is the XLF going to do, because for the XLF, which is quite a bit under, just in the moment that we've been talking, it's moved up. From the 1597 level, it needs all of the banks, of course, even though there's different weightings, it needs all of the banks to move, and it needs to clear that gap and get above the candle of 1577. The XLF had a low on the 12th. So, is it the 12th?
Well, one thing nice about the Bank America, and I'm not married to any particular stock, it just happens to be the one that works best for me now, is the fact that even when the XLF takes a dive, Bank America doesn't seem to really follow it that far down.
It's almost
it seems to be very resilient.
It's almost as if the selling is just so, the selling was so pervasive for so long that finally what you're getting is stocks that, like Bank of America, that is just saying, hey, I got to, the spring, the trampoline was pushed down so far that I'm just trying to get back up to some normalcy. And I would have to tell you that in the weekly charts, this is leg B, there is a doji forming. So it's going to be very important that if the week closes with this doji, that Bank of America closes next week, I'm talking about the full week into next Friday afternoon, above $10.10. If it does that, that's going to be very positive. If instead the doji turns out to be where it spikes just a tad higher, but it closes the week underneath $9.40, then Bank of America could pull back to the 940. I could pull back to the 910 area. Could even give back quite a bit of the gains in a short period. So I'm watching this real closely, but I think as a trade, getting into Bank of America at the price that you got in was very good.
I agree with totally what you're saying, but for anybody that's just getting into it, I would just tell them from my experience that if it does get even into the 890 range, do not jump out if you're in at a higher price, because it will come back. This is just part of the pattern. So many people get nervous and they jump out then.
It has to be part of a plan, correct. The plan should be 3 entries, maybe one in this area, one a little bit lower down, and even one if it breaks out. If you really want to play it that way, you can even play the breakout above peak C and just have a trading stop until that gets taken out in leg D. So yeah, I would definitely consider that there has to be certain placements for Bank of America, and you could even have some crazy, just put it in and say, you know what, $8.27, something like that, and if it gets hit, great.
They were talking about possible stock split, and CNBC, some people on there who really know nothing, they're reporters, but they said they all jumped on this little girl on there because she said something about, Mandy said something about, that has nothing to do with, she said the retail investor might not want it because it's a higher price than. Well, I can tell you from absolute experience, Basil, I used to trade a lot of Citibank, and I'm in 2 or 3 trading groups. 90% of the people that used to trade Citibank, when it's $3 and $4,
right,
do not trade it anymore. So I don't care what those big wigs said. I know for a fact that 20-plus people that we used to trade Citibank every day, and I know it's really the same price. It's just, more shares.
Right.
Don't trade it anymore. So that's a fact. That's just human nature. I mean,
that's exactly right.
It's like when they break down the price of Google. It's actually only $100. It doesn't matter. It's not the way the human mind thinks. It's a $600 stock.
Right.
And
that's another good point.
Or something,
So okay, I appreciate the call, and I respect the fact that you've really made this, you've honed in on a particular technique, and I hope that people really understand that if you can develop a particular technique that you just can repeat over and over and over, that is very important. Thank you so much, and have a great weekend, Mike.
Thank you, Basil. You too.
Thank you for calling. So we were looking at that particular. Now let me just talk about the volatility index, the VIX index. Now, in looking at the volatility index, it's really important for me, besides the makeup, the construct of the volatility index, it is very important that the price movement of the volatility index tells us a great deal about where it's going and what it's doing. And in that context, the fact that it made this little peak D yesterday in the 120-minute chart, and then it pulled back, and it wasn't even a very strong buy mode from the, let me just go to that again, from the low of 13.66 to the high of 16.58. That's really nothing, 3 points. So that tells me that my focus, my total focus on the volatility index has to continue. And as long as the volatility index is down as long as it holds under 18, and I mean holds, I don't mean like intraday. The moment it breaks above 18 and goes to the 20s, believe me, the market will become, as far as I'm concerned, will become highly volatile and vulnerable to a decline. So that's the way I'm looking at it. A sustained decline, it would have to be in the 30s or higher. For a sustained, when I'm just talking about a sustained decline, I'm talking about an intermediate term decline. So at this particular point, I've got a left side, right side price time match, which comes in. This week was the last week of this particular one. I can move that line because I go line by line. But from April of last year at 1427 to the midpoint of October of 2011 at 35.19 on the rally, to the low this week, last week of 13.99. Whoops, 13.66. I must change that. So far, it's saying focus, focus, focus on that VIX index. Because why? Because it's not the dollar, it's not bonds. You can see bonds are up. TLT's up 95 cents, 96, and the market's managed to rally. It is not. It is about the buying pressure contained within that volatility index, just as an index. And the number happens to be the number because, hey, that can change. You remember there was a long time ago, it was maybe 5 years ago, back in 2005, 6, when I was saying I've moved the number on the volatility index. I used to think it was up in the 30s and 40s, and I had moved it down. The same as I used a particular number on the TRIN. I made it my benchmark, two new numbers. Why? Because you've got to move with the markets, but the actual peaks and troughs, none of that changes. Now, this is very important. What I'd also said is that in the volatility index, when you start to break, the history of this is that since the breakdown going into March of 2010, 2 years ago, when the volatility index broke down below, it was around about the 20 to 21 area. It actually went down to the 18s. That's when I said, okay, now we're going to have to watch this. Then we had the Greece crisis, went to 48.20. Then it pulled back. I called that the ChapmanWave Eiffel Tower formation. Then we had the budget crisis, S&P downgrades, the United States monetary system. Then it goes to the European crisis, then another Greek crisis. And all of this has taken the VIX down to the 13 point. Did I type 99 instead of 66? Yeah, that should be 1366. Yeah, 13.66 area. So that says to me, I have to keep focusing on this. We've made a lower low in the volatility index. We've gone from 15.17 back in 2010. 2011 was 14.29. 2012 is 13.66. The other thing is I love to look at cyclicality. Well, the cyclicality of these U-shaped formations says that normally you go down for a month or more than a year and a half from the peak into the trough before the volatility index starts up. And that says to me we've got a little longer period, and that's the reason why I'm saying that next week is If we do make slightly higher highs and we don't break down, Dow doesn't close below 12,900, let's say, let's just give it a nice round number, in the next 2-3 days, that would say to me that even if there is a sharper pullback next week, because there's a rotational aspect to this whole thing, that some sectors might hold better. Now, talking about sectors, it's very important that we look at HGX. Why? Because the Philadelphia Housing Sector Index has been on a tear since it made a low. Look at this. Major sell signal in the HGX index way back at 278. The high was 293 back in 2005 in July. A whole series of dreaded H patterns comes all the way back. It's trading now at 127.38. But you know what? It made a low of 54.31 in March of 2009. That's 3 years ago. And it's managed now for, I can do that. My target had been that 200 period moving average. And that's one of the reasons why we have a home builder. And I'm hoping that we can keep this home builder from just 2 points off its low and keep it for a while, quite a while, and add to it as trading positions haven't got that signal yet in terms of adding. Now, look at this. When you look at the 200 period exponential moving average at 133.93, the high this month so far is 132.38. So we're almost, for the very first time since the HGX Philadelphia Housing Sector Index broke down from February, March of 2008, this is the first time that it's come even closer. Tried at 132.32 for peak C in the monthly chart, April of 2010. 2 years later, it's trying again. Now, the cyclicality says to me, be a little careful. For the last week or so, you've heard just about everybody saying the home builders, the home builders. Well, for some of us who have been in the home builders for a while, that can make you a little bit nervous by saying, if that period of recognition, just as Mike was talking about this period of recognition in some of the financials, that says you might be ready for some kind of a pullback. What would that pullback do? Well, today was the opportunity. Is a peak D, potential peak D in the weekly chart. If it doesn't take out 132.38, and it's just about no chance that it can do that today. I'm saying that just to tempt fate. I hope the trading gods are flying around just listening to me. I don't think there's any chance of the HGX breaking to a new recovery high above 132.38 today. No, actually, I don't think there is. But look at the daily chart. The daily chart has gone from the last trough. The weekly chart is still very strong with the MACD and stochastic, although the stochastic's a little lower now than it was at peak C. So that says to me, okay, got to have a little heads up here. Here's the other thing. In the daily, there, I could call that just a rare peak G, a rogue wave, or right arm extension. But everything about this says no. That is a peak A, and somehow or other there could be a choppy period with the low of today at 123.53. Wow, 4 points? This is a huge comeback. That low, if that low is not broken next week, then we could see the home builders move a little bit higher. So, you know what? All I can say is that the weight of evidence at this particular point says today is a very critical day, and if what we're looking at right now is a sense of the buying power based on that volatility index, then there's a real good chance that we will try at least to rally if there's a nice close today. And what I mean by that, the Dow's up 35, S&P's up 3. Let's say that they can move just a little higher, close at about plus 47 for the Dow rather than down 15, and plus 475 for the S&P. I think that'll be good action. Monday will be critical. So I'll be back straight off this break. Basil Chapman, 877-927-6648. Hey, I'll take a couple of questions in the den. How about that?
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi everyone, Basil Chapman. Had a couple of requests in the den, which we'll get to right away. The first one was UNF, which is Universe Core, and I haven't got time to check what it is, but let's just do this. Monthly chart has had a very consistent series. For those of you watching me do the ChapmanWave in the den, isn't it remarkable? Look at this. From the low bar of the June of 2000 at 744, it went to a peak D and then an E, 5 peaks higher at 2878. Pulls back to where? The 200-period moving average. Starts a new buy mode in April of 2003 from the 14 round number area. Goes to another peak E at 4575 in July of 2005. Pulls back to 2865 and makes another peak D. I just needed to check that. 50.46, 50.44. Yeah, a peak D right in May of 2008. 20.8. Then it pulls back just underneath the 200 period moving average to 20.16 and runs a very quick peak D again. So what's the 6 at least peak Ds? We've got 6 at 55.79 in March of 2010. March is the month, I guess. Makes a peak D, pulls back to August of 2010 at 38.14. Then it runs up to a peak C. This says to me it should make a peak D because the technicals are still very good. The weekly chart has made a peak D from the big doji candle of October of last year. Now, what's really important, if it breaks under, closes under 58.27, be careful because it could pull all the way back to about 56.25. If you're in it, I'd say that I'd put a stop on some of the position on a close. It has to be a close below 58. But if next week it's able to get into the body of the week of the candle of last week, it's at 59.29, down 31 cents. That's really positive. I suspect that it will go to a leg D up. So on the upside, you want to break above 61.42 in the next week or two without closing under 58.27. On the longer term, I like it a lot. Shorter term, the daily is saying the same thing. The daily is saying, I'm struggling. There's a much better chance that I'm going to retest the 58.82 low of the 9th than the high of the 21st of March of 60.08. If it breaks 60.08, that's really positive. So I wanted to do that. I hope that helps you. And now here's the other thing. The EWJ I was asked about. EWJ is Japan. Japan's in a very interesting situation. I like the weekly chart a lot. The USD JPY has got just missed, made a little double top, didn't make, is that a D? Yep, that's a D. So the EWJ is iShares Japan Index Fund. What's important about this, it made a peak D, and all I see it doing right now, because the technicals failed miserably, and yet the price is held, is that it's in a rectangle formation with a very good chance that if it's able to climb above, it's very important that it does it. It needs by Monday afternoon or Tuesday afternoon, it needs to get, it's at 998. It needs to climb above 10.03, 10.03 by Monday afternoon, Tuesday morning. If it can do that, that'll be very important because it'll say within the rectangle, instead of making the dreaded H formation, and that would be if it closes underneath $9.90 Monday afternoon or Tuesday. So these are the parameters to watch. You got to be careful because if it breaks under that, it'll go and test the 986 level. On the upside, the technicals have failed, but they are just about ready to try to move to the upside. It'll need another 2 strong sessions to get the MACD to flatten out and become positive. So the weekly chart I like a lot. It could also be in a rectangle formation for a little while. 975 will be a very critical closing area for Japan on the weekly chart. So I didn't do copper, but as we go out, I'm going to the April copper. Copper needs very much to push up to the 385 level. Basil Chapman, my services, the opening call, very comprehensive look at the markets, plus my traders corner with our stops. And thank you very much for those of you who called in, those of you who are listening. Have a wonderful weekend. Stay tuned for Nico Dahan. Should be a great show as always with Nico. I'll be back Monday.
Are you looking for